All right, guys. So market slightly green today in the SPY. Nasdaq slightly red. Tech down a little bit. Had a slight red day finally yesterday. First red day in a minute. I still had a pretty green portfolio yesterday, though. Exxon still down. Tesla finally red on that one this morning. What's up, new trader Brian Stewart? We're gonna do a poll here, like we always do. Does jobless claims data cause a bullish or bearish response? Market response. All right, so there's that poll that is live. Again, we got jobless claims numbers today, dropping at 8:30. Expectations for this report. Are for 222K. We also have the Philly Fed Index data. All right, so yeah, jobless claim expectations are 222,000. Up there so you can see it. What do you do if you're in a losing streak? Scale down your size. This is what you do, most likely. All right. I'm drinking some coffee. Volatile few days yesterday. We had PPI. Day before that, we had CPI. Last week, we had other stuff. Jerome Powell press conferences. Next week, tomorrow, we got Euro CPI and housing starts. I don't think we really have anything big next week either, though, like in terms of economic reports. We got existing home sales. We got the on Tuesday, the 21st, we've got the Fed minutes report, NVIDIA earnings, and that's basically it. Nothing really in the morning. Wednesday, we got core durable good orders and jobless claims. So no, that's Thursday. Okay, yeah, they're all messed up. I'm just gonna look at Market Watch. We got a bunch of Fed speakers today too. Tomorrow we got housing starts. A bunch of Fed speakers this week, so yeah. So Monday, what does U.S. leading economic indicators mean? Existing home sales Tuesday, FOMC minutes report Tuesday, NVIDIA earnings next Tuesday. Wednesday, it says we have jobless claims. Oh, okay. So we got jobless claims next Wednesday because Thursday is a holiday, and then Friday we got flash PMI. So actually, okay, next week's a holiday week. It's Thanksgiving week. Okay, that makes more sense. So it is old. It is a Wednesday, and then the week after that. The consumer confidence. GDP data the week after that, followed by PCE data Thursday, followed by manufacturing PMI Friday. So yeah, still a busy few weeks even with next week. What's up? NVIDIA, where's NVIDIA at right now? You know, I see tech is down, right, with the Q. So NVIDIA finally slumped down a little bit, broke 500, slumped down a little bit. SPY, again, is at 449s right now. Let's put a timer up for jobless claims. There's the timer. Can y'all hear the music? You should be able to. Let me know if you can. What's up, William? What's up, Pawn? Oh yeah, we have Alibaba earnings this morning. Forgot about that. Yeah, Baba earnings. I think they're already out. We got Baba, Walmart, Macy's, a bunch of earnings this morning, actually. Walmart not out yet. Macy's not out yet. Baba not out yet. Weird. Yeah, Alibaba's scheduled to release at 6 a.m. It should have been released like 40 minutes ago. It's still not out. They're late. Walmart's scheduled for 7. Macy's scheduled for 6:55, so we got about 13 minutes there. That's basically it. We got like Williams Sonoma. Whew. Yeah, scout on your size. That's all I was saying. That's the single easiest way to, if you're losing a lot, you need to either change your system, change your strategy, and if you're going to keep trading the same strategy, scale down your size and test it a little bit more. You know, the problem with a lot of new traders is that they just stay trading the same way, the same system, the same strategy. They don't ever change it. They just kind of They just kind of keep doing the same thing, expecting a different result, which is Einstein's definition of insanity. Wait, where'd all the... Hold on. Anyone following Spirit Airlines merger with JetBlue, petition for almost 3x, just waiting on. No, I haven't been really following that. Yeah, I mean, maybe we crash Ponzi, but you've been saying this since before this latest run up, and the market has run up a lot. It's at 450s right now. So maybe we do. I think it's unlikely. Kathy Wood says the price of one Bitcoin could rise to 1.5 mil. BlackRock files S1 application for its spot ETH ETF. Hmm. All right, guys. Sorry, I'm looking at I'm trying to find something going on with scripts right now. All right. Hey, what's up? What's up, Manny? Thank you for reporting this week, sir. All good, brother. Thank you, man. Where's crypto at right now? Yeah, I mean, maybe it does, but I don't think it happens anytime soon. You know, Bitcoin though looking good, up to almost 38,000 right now. Kind of hard not to be a bull on the markets, to be honest. Yeah, I mean, I hope so. All right, guys. Kind of hard not to be a bull in the markets. Yeah, I mean, the market's up so much is the only thing. Like the market's up a lot. So I think like I told you guys yesterday, I'm usually a little bit more bearish when the market's up this much. I think we're just up a lot. So I think that's something that people have to understand. The market's just up a lot. All right, team. Sorry, I'm kind of doing some work in the background here. Will the jobless claims affect the market? Yeah, it'll probably affect it some. Cisco down 11%. Yeah, Cisco had earnings. That's probably weighing on tech as well. Cisco did release their earnings. I didn't cover it. Cisco's not really big enough. Macy's did just release their numbers. I'm going to be shocked if, Macy's is already a $13 stock a share. And I guess Macy's is still around. Macy's adjusted EPS came in at 21 cents a share. They expected 0 cents. They came in at sales of 4.86 billion. They expected 4.78 billion expected. So higher than expected EPS and sales results for Macy's. All right, guys. Let's see what else we got. Quick shot. Try. Sorry, I'm playing with different indicators on TradingView right now. I don't agree with Target CEO. Yeah, I made so much from Target yesterday. I finally got out of it. Sold at about 130s, so I think I got out at probably the right time, most likely. You know what I mean? And today we got jobless claims numbers dropping as well, team. So again, then these numbers drop in an hour and a half. Let's see if we get something good with this today. Let me see if I can mute the sound, mute notifications. There we go. All right. Yeah, so this guy talks about German history. 100 years ago today, Weimar Germany abolished the paper mark. marking the end of Germany's hyperinflation. In that same year, Joseph Wild, a master goldsmith from Nuremberg, started minting his own coins to advocate for a return to a gold standard with private coins. His coins were so popular among the public that the German government hated this form of private competition with its own money, which it used to levy a continuous inflation tax. Gold broker Kuhnken notes, quote, his coins were a matter of conviction. He didn't make any money off of them. On the contrary, coin dealer Carl Friedrich Gerbert had to provide financial aid to Joseph Wild time and time again, mostly by buying his coins off of him whenever he was in financial distress. Sometime in the year 1928, Joseph Wild must have started to copy old gold coins from German Empire. Based on this, in 29, the goldsmith from Nuremberg was convicted of forgery and sentenced to several years in prison, even though his own coin actually had a much higher intrinsic value than all the money given out by the German government. Nonetheless, at the age of 57, he had to go to prison and he would never leave. So again, I guess the overarching point of this story, guys, is that competing forms of money, the government does not like. Governments don't like competing forms of money. And so if you want to know why everybody hates crypto, it's not that hard. It's not that hard to figure out and put two and two together why everybody hates crypto, specifically the banks. Banks are the biggest haters of crypto because it's the biggest threat to them, of course. Are Baba earnings out? I'm not sure yet. Let me see. Macy's is out. Here's Macy's numbers. We'll put those up on screen. Yeah, Baba out. Finally dropping their numbers. Alibaba is out with numbers. Baba posted adjusted EPS of 214. They expected 212. Revenue of 30.81. They expected 30.79. So a slight beat in both is what I see here for Alibaba. Slight beat in both for Alibaba. Alibaba is actually down pretty dramatically, down to $81 a share. Walmart just raised their number, or just dropped their numbers as well. Walmart posted EPS of 153. They expected 152. Revenue of 160. They expected 159.7. Raised fiscal year EPS view to 648 from 646. Raised fiscal year SSS view to 5.5 from 4.5. So raised guidance. Pretty neutral results, like slight beats on everything for Walmart here. We'll put this number up on screen, but slight beats and everything here for Walmart. Not like a crazy beat, but they did raise guidance, which is good. Yeah, so there's Baba dumping. Let's see if Walmart up. Walmart should be up, I would say, and I might buy the dip if not, Luckily, we took some profit into Walmart yesterday. Down some today, though, after this, but it's all right. Yeah, what's up, Stones? Yeah, Walmart down, which is surprising because they had good guidance numbers, which means I might buy them up a little bit more. Like, we're holding a small share size right now, so I might add a little bit to this. Try to fix my average. I'm still very green. My average is 156s in Walmart, 156, and so I'm going to add at the bottom of this range if I can, just a small amount. All right, we added a little bit more. All right, so again, we added a little bit to Walmart. Yeah, Macy's just released. What's up, Sam? Watching Bitcoin here again. Alibaba, Bitcoin, Walmart all released earnings today. They didn't really do that hot. I worked 6 days per week. All of 2022, 2 months ago, I was cut back to 5. So you mean you only missed out on 1 day during the week? All right, here. This song is too much. Too much. There we go. It's better. All right, guys. Do you think jobless claims numbers are going to come in high or low? Let me know right now. Vote on the poll. Looking at our poll numbers, 55% think they're going to be bullish. 32% think bearish. 14 honest folks say I don't know. Kathy Wood update ARK is down 75% since February 2021. Kathy Wood almost said her strategies can deliver a 40% compound annual return over the next 5 years. That was said December 21st, 21. We got the Cybertruck delivery event, 11/30/2023, so November 30th. We're going to stream this, of course. All right, guys. We're adding a little bit more to our Walmart trade just because it's dipping. Again, we're still very green in it, and so we're only adding to this because we're already up. All right, and our average was already pretty good. And so we're kind of setting ourselves up to make a little bit more when we bounce, if we bounce, because we've dropped so much from earnings. And again, they had good guidance is the only reason I'm buying this right now. Their guidance wasn't bad. We're still green on the trade in Walmart overall. It was a very small trade, and we locked in some profit on it yesterday, and now we're down about $50 today. But again, we're buying this in case we bounce back up, and if not, we'll probably just sit on it. We got 15 shares, and so it's not a huge trade. We're not losing our butt on this one, and it's all good. All right, to earn $500 a month or $6,000 a year from Home Depot divvies, you need over 200,000 according to Benzinga. All right, guys, jobless claims numbers in an hour and 20. We did get a little bounce up here for Walmart. Let's see if it continues to bounce. All right, guys. All right, so Walmart's still bouncing up, back up to 163s. SPY took a pretty big dip after these earnings came out. It's still nothing compared with the run-ups we've taken. Macy's, yeah, Macy's had good numbers for sure. Macy's up to 14. What's up, Beach? My short Q position is gonna. Hey, good luck, Trance. Yeah, so a lot of stuff's breaking down. Hey, what happened, Alexis? Thank goodness. Didn't want to complain. You read my mind. About what? Regarding what? Updates on NASDAQ 100. NASDAQ's down, I'm sure, right now. Earnings mostly. NVIDIA down as well for the NASDAQ 100, which is the NQ. It's down to 15.8, but it's up so much. Like, again, here's the NASDAQ 100 right now. Walmart dipping down, right? But here's the NASDAQ 100 right now. All right, you can also use NDX as a whole, but it's not going to show you pre-market. And so we're just going to look at the NQ futures contract. But again, look at a 20-day chart. This thing is up so much, dude. This thing was at 14,000 a week or two ago, and now it's at 16,000 roughly. Yearly chart on the NASDAQ 100 is very strong. The high of the year is 16.062K, and we're getting pretty close to that. Oh, yeah, the music. Okay, gotcha. Yeah, that song was a little bit too hyped for me. During the last 10 years, Icahn Enterprises stock down 81%. S&P up 156%. What's the Icahn? Oh, it's IEP. Yeah, dude, it never ended up rebounding. This was the one Hindenburg short report that actually like worked. SQ back up to almost 60. I think traders go through stages, man. I really do. Like, I think like new traders that don't really understand, they go through this chart phase where like they think they look smart if they throw all these crazy indicators and charts and monitors, and then they post the picture of themselves like in front of all these charts, right? They think that makes them smart. I think as you evolve as a trader, you start to realize that, like, bro, there ain't no way you're watching all of those symbols. You know what I mean? And if you're trying to, it's almost certainly a losing endeavor. Like, it's going to distract you so heavily watching all those different things that it's just not really going to be profitable like that. But again, I think new traders specifically, they get enamored with this idea that they are like this super intelligent trader, and so they just start like taking pictures of themselves in front of all these crazy charts that just kind of look like this. Like, if I put these charts up, like, I can make my chart look crazy too, you know. Like, I can do this and put this up, and then put the 20 and the 50 up, and then I could put, you know what I mean, I could put the crossover symbols, and then I could put hammer. Oh, it does show me hammers. That's dope. I could put up, all these different crazy things to make myself look smarter than I am, right? And again, I failed at it because I don't even know how to put all those charts up. But like, I could put up all these different things, but like, I'd rather just remove all of them. And I go with only two, where my two are VWAP 200 EMA. That's it. That's the only thing I go with. VWAP 200 EMA. That's it. Now, I might throw up what I just noticed here. Is engulfing candlesticks. I am going to put up engulfing candlesticks because engulfing candlesticks can be powerful. So I will throw this up on my chart and use this. I'll probably put it up on this one too, to be honest. Here we go. All right. Yeah. I mean, you can have as many monitors as you want, especially like if you're somebody like me who, like, I have to manage a live stream, so like I'm a little bit different. I have to manage a live stream and have people watch me, and so I have to manage streaming software and broadcast software. I have to use, like, the monitors are fine. I'm not against the monitors. What I'm talking about is the people that, like, I see people with like these big monitors, right, like this, and they do like this basically. You know what I mean? Like, bro, there ain't no way you're looking at all these freaking charts. Like, that's silly. That's ridiculous. Like, nobody is going, like, you're just trying to look smart, but you end up looking dumb to me because nobody's using all these freaking charts. You know, 2 is going to be much more effective where you're going to be able to really see what's going on. And I'm using one specific Twitter user in penny stocks as an example. I'm not going to say who it is, but like, "85% of Americans in October said now is a bad time to purchase a home because of high home prices and high mortgage rates, an all-time high according to Fannie Mae." Yeah, I get it. It's not time to buy a house, unfortunately. Like, definitely not time to freaking mortgage a house, no matter what they say. They'll tell you you can refinance and all this different stuff. Like, no, do not buy a house right now. All right, so I gotta listen to this real quick. Hold on, guys. I'm gonna mute the screen audio. What? Dude, I can't understand what he's saying. He's mumbling. I'm again, it's hard for me to watch. It's such a vulnerable position. I'm not really gonna go into detail about what I just watched, but like, it's such a hard thing to watch, man. Because yeah, I don't want to go into it, but like, it's such a hard thing to watch. Car market is falling now. I hope it does, man. Car market needs to fall. All right, guys. Again, we might be getting funded in another account today. You know, I might buy a little bit of the Nasdaq here. Yeah, we might trade on Quant Tower instead, though. Warren Buffett unloaded his whole GM portfolio. Yeah. All right, guys, we got jobless claims in an hour now, in 1 hour. All right, guys, we ended up buying, boom. All right, so we just made a quick little $60 buying the Nasdaq in Top Step. Again, we got jobless claims coming out soon. Finally down a little bit on the day, man. This is my first red day in a long time. Walmart is really the reason. I mean, we're pretty flat in Walmart, believe it or not. Actually, we're up still $2 on the trade overall. I don't think I'm going to add any more to this one, though. NASDAQ bouncing up pretty strong. Yeah, sorry, I'm reading a lot of other stuff. Yeah. All right, guys, we did get a little pullback after that small bounce. All right, guys, market's starting to flush down some here as well, starting to dip down some. All right, so still, Tim, we got about an hour left, a little bit over an hour. Market's very flat right now. You can see the NASDAQ and the SPY on the right side. Where's Tesla at? I'm assuming Tesla pulled back a little bit. Yeah, so down slightly on the day. Not as big of a pullback as a lot of the other stuff. So Tesla kind of leading the market at 240s right now. Where yesterday, a lot of the market ended up falling down. Yeah, I don't know if it's necessarily going to be a boom today. Again, I think the market's up a lot. And I think if we keep pushing, I think the market's just up. Could be up a little bit too much for me. I don't think we're going to give back all the gains, of course, but I think we're up a lot, and we have to just be careful, you know. Xbox is giving away an edible Xbox controller and a Willy Wonka themed Series X. Bro, I like Willy Wonka, but I never was a super fan of Willy Wonka. I liked Willy Wonka as a kid. But it was never again, Walmart turning, still falling down. I'm not sure why Walmart's dropping so much. I know Walmart notes competitor sales were driven by strength in groceries or comp sales were driven by strength in grocery and health services, offset by softness in general merchandise, which were heightened on by softness in discretionary categories such as apparel, home, and sporting goods. Basically, stuff's really expensive. Now we're down $50 on the day. And again, I might add a little bit more to it, but I'm not gonna like just blindly keep adding to it either. Like, we're gonna add 5 more shares and then probably just stop. Lex knows everybody. Gene Wilder, the GOAT. Everybody expecting a pullback the next day, so I bet against it. Yeah, but I think that's kind of what's happened already, though, Lex. I think the thing you have to understand is that everybody's already been expecting a pullback. It's one of the reasons the market has shot up the last few weeks is because everybody keeps thinking the market's going to dip and dip and dip and dip, and then the market just rips instead, rips up in everybody's face. And so I think everybody's already been expecting that. You know what I mean? Penny stock gurus telling people index funds are useless and penny stocks are somehow the greatest opportunity in the world are freaking ridiculous, bro. Like, again, it all boils down to big money, right? Like, it really is like an intelligence test to a certain extent, I think, right? And I can't even say any, maybe I'm dumb because I fell for this in the beginning too, so I'm not trying to act like superior. But like, at a certain point, if you buy into this for too long, I think you're going to realize very quickly, like, you have to watch what big money does, team. You know, big money might day trade, but it definitely doesn't day trade penny stocks. You know, big money invests mostly in index funds and you know, in stuff like that. It's, if you want to know what actually works, watch what big money does. That's the single easiest way to know what actually works. And again, one thing that is universally true is that big money does not invest in penny stocks. And now they're going to give you the argument of, oh, well, you know, it's not really scalable like that. Nonsense. You know, they use the example, oh, you could grow a small account. It's like, yeah, but you're taking huge risks to do it. You know, if you have to risk 50% of $1,000 account just to grow it, you are risking 50%. That's not feasible. The reason that doesn't scale is because it doesn't work as it is. You have the likelihood of losing 50% of your account. Like, snap out of that behavior. Like, they can be very, very tricky. Be smart, guys. Understand the single biggest edge in markets is long-term value investing in index funds. That's it. That's the biggest edge you'll ever have. I'm not saying there's no edge. I day trade every day. I think there's powerful edge in day trading if you do it correctly. But again, in my opinion, and maybe I just suck at penny stocks, that might be true. In my opinion, it's certainly not in penny stocks. Why? Because penny stocks can get halted, diluted, all this crazy stuff right in the middle of the trade. You know, penny stocks are much more manipulated, not just by traders, but by the executives themselves manipulate the companies. You know, a lot of CEOs in penny stocks know the company will never succeed, but they also know that they have the opportunity to get rich and pump it up and make millions of dollars on the backs of their shareholders if they can artificially inflate it and sell at the top and then leave their shareholders sitting on it. Penny stock gurus know this as well more than anybody. And so one thing I'm seeing a lot is that penny stock gurus are starting to team up together because they know that, like, they know the gig is up. You know what I mean? Yeah, Alibaba's are out and they did really bad. Yeah, I mean, I'm not talking about any individual company straitjacket. Of course, you're gonna have bad blue chips. That's obviously there. That's just normal life and stocks. Blue chips are gonna suck sometimes, but even on GM, again, Warren Buffett probably bought a small position on GM. And GM's one of the worst performing pennies there. I don't even know if I guess I'd call this a blue chip, but the long-term chart's not really good. This isn't just like a 5-year downtrend. This has been downtrending since 1999. And again, anybody can like point out an outlier, but like again, you don't want to get wrapped up in it. A lot of people have confirmation bias because they don't have that much money, right? So they want to trade penny stocks because they think they have to. So they want to believe it's some amazing opportunity. Again, maybe I just suck at it. I don't know. But just be careful, guys. All right, we're watching the NASDAQ here. Again, we got 50 minutes here, team. 50 minutes. All right, we're shorting the NASDAQ here. We've been shorting this in futures. Again, day trade futures if you want to day trade, guys. We already locked in some profit. Again, day trade futures here, team. Futures can be powerful. And if you use my type of system where you just build up a cushion in futures and then you trade based off of that cushion alone. All right, we're gonna go ahead and cut that. So we should be up like at least $100, I think, on the day right now. Let me see. Yeah, we're up $110, $115. So we got half that cushion already. And again, we're very close in this account to getting funded on this latest one. And if I get funded on this one, this will be 3 funded accounts. And then a couple other ones that are pretty close to. I'm trying to this one in pre-market, this combine account. Let me look at. Can you say something about Exxon? Well, oil has given back a lot of its big run-ups. Oil was doing well during the slump, and now during the run-up, it's doing worse. So Exxon is at 103s. I'm down a little bit in Exxon. Our average price is 106. We're at 104s, 103s. I certainly lose. I'm in Walmart right now. I certainly lose. But my portfolio is up a nice little amount right now. I mean, we're up about $1,200 in my current portfolio total. Like, that's not even on the day. We're actually down on the day, but my portfolio is currently up about $1,200. I'll show it to you. Prior to Walmart, we were up like $1,300, $1,400. Where'd my mouse go? Yeah, so this is what we're up about. this in my portfolio currently right now. That's my total profit right now in this so far. All right, guys, we got almost 500 people here. Again, jobless claim numbers drop in about an hour. All right, so again, market's starting to flush a little bit. We've been attacking these engulfing candles today. Mostly in the NASDAQ. Is Binance safe right now, guys, is the question. All right, so again, look at the NASDAQ rip back up. We did get a, there goes an engulfing candle, but at 8:30 Eastern Standard Time. Yeah, I took profit in most of my Walmart trade yesterday, Greg, and then I added back to it this morning after this big dip, you know. Is basically what I did. All right, guys. Hey, again, we got about an hour before jobless claims numbers come out, about 1 hour. Yeah, so most people think we're going to hit a soft landing now. Do you guys think we're going to hit a soft landing or go into a recession in 2024? Where's AMD? Again, AMD at 117s. Look at the SPY up here. All right, a small little pop. All right, so now we're dipping down. Yeah, that's the only thing. It is election year. I think that's going to push a potential thing away. I don't think it's going to be as easy to hit that, you know. All right, guys, look at the NASDAQ rip up here. Big pop, big move up. We got a nice little cushion on everything. We're going to keep trying, though. I wonder if the NASDAQ's actually going to break over this high. So the SPY just hit the 200, or the volume-weighted average price is purple on is the VWAP here. So the SPY just hit VWAP. Look at this big bounce. How do you buy fractional shares? I don't think you can on TOS. It's only specific platforms that let you do it. I think Webull, Robinhood might let you do it, but I don't think you can own on TOS. Yeah, I don't know if I'm going to be getting that cool car I talked about. I never said what it was. That we found something in it that we didn't, that we didn't like. And so we're not going to be getting it. Not that I think of, at least. So all good. Again, so SPY rejecting that previous, or the NASDAQ rejecting that previous closing price. So rejecting that previous close. All right, team. We're rejecting this potential level, I think, but I'm not 100% sure. I'm going to go ahead and jump in short here on the NASDAQ. All right, so we're up a little bit here. There's got to be a way to change this. All right, so we're flat right now. Now we're up about 15 bucks. I'd like a little bit more, but again, we're short. We'll see what happens if the S&P rejects. This is the NASDAQ I'm technically short in, though. All right, so we're still up. right, so now we're up 30 or so, 40. Nice. I like it. Double top. We're going to go ahead and cut that. And so we're up close to 200 on the day. We're up about 170 on this trade. So that short did work. Again, the reason we shorted is because we were right around this previous closing price. All right, guys, bear with me. And so now we're about to back up a little bit. So we did get that big breakdown. I probably could have stayed in the short a little bit longer. So look at that big breakdown on the NASDAQ here. Big flush down. I would short it, and I'm thinking about still shorting it a little bit more. All right, guys. All right, so we got a little pop up. I'm going to think about shorting this now, too. I could short it just in the regular TOS account. All right, here. Sorry, I'm working on something in the background. All right, so we did get a bounce back up here. Again, part of me wants to short. I guess I'll go ahead and try it. We're already up almost at 200 on the day on this one. So I don't mind shorting this little pop into that previous resistance level. We also have enough of a cushion to where we could probably add more to this if we want on the NASDAQ here. Let me add this a little bit larger. So if we want to add more, we probably could. There we go. We're nicely green, up 30. I guess we're not going to need to. We're going to go ahead and take profit there. Again, we were already up. We just made so much so quickly on that trade. We caught that rejection. We're up 220 on the day now. We haven't had one trade, losing trade, day trading, and scalping currently so far. We also had an engulfing candle show up, so we'll see how that looks. So we got over 500 people here. We still got over 30 minutes before jobless claims numbers come out. Hey, nice pawn. Well, Harry, you can try Top Step Futures. I'm trading on a funded account program in futures. And so, again, what they do is they give you a demo and they test your skill. And if you can pass the test, they fund you. If you don't pass the test, you're probably going to lose much less than you would putting up the money yourself. You know, again, futures trading can be expensive, but there's no PDT rule in futures. So you can day trade short. You can see I'm buying market, selling market, and pre-market right now in futures. And again, there's no PDT rule. I can day trade short, buy market, sell market. I can use bid, ask if I want, just like day trading stocks, but there's no PDT rule. I'm basically trading the Q right now in futures. It's called the NQ or the NQ E-mini, the E-mini NASDAQ 100. And again, patterns in this are very similar to like Tesla, NVIDIA, all that stuff, but there's no PDT rule, right? And so again, I can watch the Q and trade the NASDAQ in futures, and there's no PDT rule. And again, what they do is they give you a demo and they test your skill. Top Step's the most legit one in the world. They pay out millions in actual withdrawals every year. They fund thousands of traders a year. They've been around for over a decade. There's free funding coaches, and the base one's $49. And so even if most traders lose in day trading, it's a lot cheaper to lose this than putting up thousands yourself and risking that. When I first got started day trading, I lost thousands of dollars. And so, you know, and again, the risk management system I talk about a lot. Link if you want to check it out. Yeah, so when you're first funded, Alan, you have to pay one fee of $149, but it's just the first time you're funded. But again, they are a sponsor of mine. I'm definitely biased, of course, but I think it's incredibly useful because ultimately it makes it so that you can learn how to trade under pressure with less risk. And I think that's an incredibly valuable thing. Basically, bro, I see Penny Stock Guru saying in October the market was going to crash. Ha ha, dumb longs, dumb index fund traders, ha ha ha. And then when the market ended up ripping up 20% or whatever it did, freaking dumb shorts, ha ha ha. Dumb shorts. Who shorts index funds? Ha ha ha. Like, bro, like, I'm not gonna say names, but I've been watching it. Like, the amount of contradiction in what some of these guys say in penny stocks are so crazy, you know. And I'm sure we got some people at home like, John, you contradict yourself a lot. If I do, I usually make fun of myself, right? And I'm not selling people a course pretending to be always right. Like, I make fun of myself. I brought up the fact that I thought GameStop was a short at $4 in 2021 a bunch. I thought Tesla was weak at 100, earlier this year. So, I mean, I'm definitely wrong. But the problem I have with people who are slanging mentorship programs and penny stocks for thousands of dollars is that they have a very hard time ever admitting they're wrong because they're so worried it's going to hurt their credibility. The beautiful part about not selling a course is I can just be like, yo, I'm wrong. Ha ha ha, I'm dumb. And it doesn't affect me because who cares whether I'm right or wrong, It's not going to hurt my credibility too much because nobody's buying a course from me, which is what I have against courses in general. The real question in the morning, did you check the trash can back in? Yes. Yeah, Alan. So listen, man. I'm pretty sure you're misunderstanding, Alan. So it's $49 a month before you're funded. Okay, before you're funded is $49 a month on the Combine, which is the challenge. It's the demo account. It's $49 a month as you're trying to pass it, which is very cheap. Again, some paper trading accounts cost more than that. I remember I used to love DOS Pro, and if I wanted to paper trade on DOS Pro, it was like $140 a month just a paper trade. And so that's the first thing. But that's only while you're in the Combine. You're in the challenge part of the part of the thing, part of Top Step, the challenge part. Once you're funded, to activate that funded account, you got to pay $149. Right. And then it's nothing. Then there's no monthly fee and it doesn't cost anything afterwards unless you want like premium data, which I don't necessarily need. I don't ever use it. But yeah, it's $149 or it's like 100 and something bucks to activate your account after you're funded. But then there's no monthly fee. I'm not selling a dream, Ricky. And again, you seem to be one of those people that just kind of sits around looking to go the other way with it and looking to argue, or my guess is you've probably been banned before here. What I will say is that I'm very honest about everything. I tell people I'm biased in their favor. I tell people that most day traders lose, and I think that's probably true here as well. I don't know how you could interpret that as selling a dream. I tell people that even if they fail the Combine, it's probably going to help them learn how to trade, which I think is objectively true. And so again, of course, I'm not selling a dream. I tell people the truth, regardless of what it is. I tell people I'm incredibly biased, that most day traders lose, that I think that's true in this regard as well. It doesn't sound like selling a dream to me, but I guess it's a subjective thing. Yeah, I mean, again, this isn't the first like critical comment by Ricky. So good day to you, sir, and have a great day. Yeah, and they refund your last month of the Combine when you pass too. I'm pretty sure they do. I have to look at my statements. I can't remember whether they did with me or not. I'm pretty sure they do though. I would reach out to them to confirm. I'm pretty sure you can sign up in the UK as well, Darren. Yeah, it's just kind of hilarious where it's like, hey guys, most day traders lose money. I think that's true here. Hey guys, I'm incredibly biased in their favor because they pay me money. John, stop selling a dream. I know, man. Listen to me over here, No, not you, Ricky. Right, 100% Tom. Like I said, they're just mad, and that's okay. If I was watching a streamer that looked this handsome, I might be kind of bitter at him too, If I was watching somebody as smart as me, you know what I mean? I'd just be like, man, I might get in my head a little bit and be like, dang, dude, this dude's so handsome. He's so smart. Everybody loves him. He's got a huge, social media following, man. What a great guy over there. I might be a little butthurt too about that. Yeah, I forgot to put the good day sirs out in chat. My bad, guys. I forgot to do that. Here, let me compensate for that right now. There you go. I'll even put Rosie, my dog, in chat. I know, man. Listen, I know. I feel you, man. I get it. $80K. Yeah, look at Walmart. Walmart actually started to reel back up a little bit. It dropped all the way down to 155 though. Nope, sounds crazy when I'll be making 500K to 1 million moves one day. I mean, what do you mean moves though, you know? Yeah, if you're losing 20K, it depends on what you're losing it in. Hey, thank you. Options. Yeah, if you're down 80K, bro, you might want to just chill out. Who lost 80K? Oh, down 80K, but coworker down 300K since 2020. Bro, what are y'all doing over there, bro? Scale down your size, dude. Why in the world would you be trading that large? Like, here's the problem, is that if you watch trading mentors and gurus, not all of them, you think it's a get-rich-quick scheme. You think that, like, real trading is taking crazy big risks and making all this money. And a funded account program is different. Let me just clarify. Like, a funded account program, you're only really risking what you paid for that funded program. And so that's a completely different thing, trying to roll up a stack there. That's a different story, right? But if we're talking actual equity, losing $80,000, brother, you are trading way too large, bro. Way too large. I think somebody sold you a dream, dude. Chill out. 80K, scale down your size, dude. You don't need to, like, again, trading should be something in which you trade very, very, very small until you actually show a profit, like a consistent profit using a large sample size. You know, again, make $50 a trade, bro, until you do that consistently enough to where you can look back at like a long sample size, a very large sample size, and you say, okay, now I'm going to slightly scale up some more, and then go from 50 to 75 or 100, and then go from 100 to 150, and then go from 150 to 200. That should be your system. If you are losing that much money, you should never be trading crazy large size, brother, trying to look cool on the internet, because in the end, you don't know anybody here, you know, and most people are full of crap. Scale down your size, dude. I feel for you, man. Okay, all good, man. Hey, make your money, brother. I'm not mad at you at all. I'm just trying to help. You know, so again, if I'm wrong and I'm just kind of talking out of my head, hey, it's all love here, bro. Do your thing, man. Make your money. Zero day till expiry options. You know, I've heard a lot about them. I think I've played with zero DTE options once. Never really messed with them like that. I don't like risking crazy sums of money. Like, my TOS account's got like over 50,000 actual liquid dollars in it. I'm not trying to lose that gambling in options for sure. I'd rather just trade slow, you know. Like, if you look at my portfolio, even in investing right now, it's filled with like small size. You know, I've got 10 shares of Apple, you know, 5 shares of Amex, you know, 11 shares of Citigroup, you know, 10 shares of Chewy. You know, I've got a little bit more shares of some other stuff, but like the portfolio there is not 500 shares of anything, because even with a $50,000 account, it's still way too large of sizing for this account. You know, if you want to make that much money safely, you're going to need a lot of money to do so. And I think that's the single biggest mistake that most new traders make, is they try to get rich quick instead of gaining wealth slowly. Walmart all the way back up to 160s here. We are now technically green on the day in Walmart, or technically green on the trade in Walmart. You'll love to see it. No, I think a combine is different, Charles. Again, a combine's $50. You know what I mean? I think it's a great middle ground. You should probably paper trade prior to anything, though. You shouldn't just jump right in. People ask me what the first step is. I always tell them, learn the ins and outs of trading first. That's going to be a lot easier on you than just jumping right in trying to go crazy, which is what a lot of people do. Market's very rangy right now, but those engulfing candles, man, they have been very accurate. Hey, what's up, Jessica? John, serious question, boss. Would you rather I didn't post my NASDAQ inferences and trade in chat completely? I only ever share the best ones, which is rare. I mean, you can post whatever you want, Sam, as long as you're not pressuring people to do anything. You know, like, again, I'm pretty even. Like, I'm pretty laid back with what people post here. As long, like, the only things that you'll see me really get critical of people on is pressuring people to do one specific thing. Like, if you're posting something telling everybody to buy or telling everybody to sell, you're going to get criticized for it here. If you're saying, hey, I'm taking this trade at this level because of this reason, that's fine. Like, everybody can have different theories on the market and post those theories here. That's what the channel's about. As long as it's not like filled with pressure, like you have to do this now, the market's going to crash tomorrow, sell now, you know, like as long as it's not that. Because again, looking at it myself, those type of posts are almost always wrong. And when they're wrong, they usually backstep, change it, and then act like they never said it, and then go to something else and then act like they never said it, you know, and then who knows how many people are trying to follow that. And so I just discourage pressure in any way here. The only thing you'll see me pressure people to do is use risk management and trade small and safe, and you know, maybe I'll pressure them not to buy a course or whatever, but yeah, definitive statements are kind of my kryptonite. I hate them. I don't use them. I don't like them. Most of the people posting them are wrong and then never admit they're wrong. Yeah, bar speaking today. I don't know how the market's going to react to that. I really don't know, brother. All right, guys, we got 16 minutes. Get rich now or be rich at 92 years old. See, at 92 is it shows how, you know, like, I get it. I understand you're saying you want to get rich now, but if you want to get rich now, it's not going to be day trading penny stocks. You know what I mean? If you want to get rich now, like, there's a system to it. You know, you're not going to be able to jump in, like, instead of getting rich now, you're just going to get broke now if you trade crazy size. And so you can't rush it just because you want to get rich is the point. You know, like, it's going to take years regardless. And if you think it's not, you know, you might have been sold a dream. Like, the reality of it is, to be successful for most people, it's going to take years. It's not going to take decades, though. Usually it's going to take years. You know, you're not going to be 92. A lot of people are never going to be profitable day trading. Number one, it doesn't matter what course they take, who they follow, what they do. 90+% of people are never going to actually make money doing this. And that's okay, because for some people, it's just not for them. But you can't skip the work just because you want to get rich because you think it takes too long to be rich. I'm pretty sure everybody that's lost their life savings has probably had the same argument. And so I think, and then the other side of that, you know, is that if you're referencing investing, talking about getting rich at 92 years old, like, basically it's going to take you 50 years to get rich investing. That's not true either. Again, if you put, again, let's look at a compound calculator. I'll do it myself. I don't need a compound calculator. Okay, so say you've got 100,000. Okay, say you got 100K, and say you invested in the S&P or the Nasdaq, which gives you about 10% a year, right? So let's do the math. Times 0.1. After 1 year, it's going to be a 110. After 2 years, it's going to be 121. After 3 years, it's going to be 133. After 4 years, it's going to be 146. After 5 years, it's going to be 161. After 6 years, it's going to be 177. After 7 years, it's going to be 194. After 8 years, it's going to be 214. After 9 years, it's going to be 235. After 10 years, it's going to be 259. And so in 10 years, you're going to have over $250,000 by investing it in the S&P 500. You know what I mean? And again, if you think you're going to get better returns in day trading, maybe you will. But again, if you're going to get better returns than this in day trading, it's going to take you years to learn how to do it. You're not going to be able to jump in and buy, Billy Bob's day trading course and just all of a sudden in a week or two, because you learn this course, just start making millions. It's just not like that. Again, that is a very naive, childish mindset. I think I thought it was like that too when I first got started. But again, my job as somebody that tries to help new traders is to snap them out of that mindset, because it's wrong and it's not going to work and you're going to lose so much money. Yeah, I mean, Yash, again, traders can claim to make whatever they want to claim to make, right? Until you actually see broker statements. And again, I'm not talking about just one broker statement out of 12 months. I'm talking about until you start to see statements for every month out of that system. You have no idea whether they're actually doing that or not. You have no idea how many times they lost their account. You know what I mean? And again, you can say, oh, well, they don't have any obligation to show me that. Listen, if you're selling a course or you're selling a system, what better credibility building thing would it be to show the actual broker statements behind it? You know why you don't see that a lot? You know why you don't see most, gurus showing you their broker statements? Because it's not really like that. No, I trade through December. December is a lot of the best trading. December, a lot of the time we have what's called like a Santa rally in December. Not always, though. It's never a for sure given thing, but a lot of the time we'll get one. I know it doesn't matter who you went to see, Yash, or anything like that, brother. Again, he can tell you whatever he wants. I could fly somebody out and say, hey, I'm rich. Hey, I made so-and-so. It doesn't mean anything. Higher jobless claims numbers are probably going to help the market. Lower jobless claims numbers are probably going to hurt the market because, again, lower jobless claim numbers is going to indicate a more robust job market. When the Fed spoke a couple weeks ago, he said that one of the biggest problems with hitting our 2% inflation target was the robust job market. The job market's been hard to push down through these rate hikes, right? The job market has been more resilient than they previously thought. And so in that regard, more jobless claims numbers is probably going to cause a better reaction in market, because it's going to mean they're pushing down the job market a little bit. On the other side of that, lower jobless claims numbers, like the expectation is 222K. On the other side of that, lower jobless claims numbers is probably going to cause dips in the market, because again, it confirms what Powell previously said was the problem, which is that the job market is resilient and too robust. Okay, and so that's the nuance of this jobless claims report that releases in 10 minutes. That is what I think you want to pay attention to with it as well. Truth. Don't you make most of your money from endorsement deals? Oh, yeah, for sure. Again, but I don't claim to be a good trader. I don't claim to be an expert. I don't sell a course. I don't charge for content ever. I love you. Have a good day. But yeah, I don't charge for anything. I don't sell a course. I don't sell my own service. I have sponsors, that I'm always transparent about my affiliation with them. So yeah, I mean, I don't even claim to be a good trader. I just give people free data. Mostly what we report on is economic reports. Like we got 800 plus people here right now because they're watching economic reports. Yeah, then I mean, you have an affiliation with them and you're just trying to promote him then. Sorry, bro. Most of the time people doing that are actually the person they're promoting. So all right, team, we got 7 minutes. NASDAQ still pushing up. We've been in this range between the VWAP. Is it going to have a big impact like CPI Tuesday? Definitely not that big. I hope it's that big, but it's definitely not going to be as big as CPI. I mean, we don't think it will be. It depends on how much the market weighs the job stuff going on, like I spoke about. Like the job market is and again, let me clarify. I think it's very possible to make a lot of money day trading, but I think learning how to day trading takes a long time. And I think in that regard, like I said, these funded account programs are useful. Of course, they're sponsors of mine, so I'm biased, but like these funded account programs are useful because, again, when I first started day trading, I lost thousands of dollars very quickly. And again, this was back in 2015. I used a platform called SureTrader, day trading penny stocks, where they gave you 6-to-1 leverage. And I had $4,000, and my wife was like, "No, John, don't do it." And I did it anyway, and I put up the $4,000 because I wanted to prove her wrong. And $4,000 in 2015 to me was a lot of money. This was like 8 or 9 years ago. It was a lot of money to me at the time. I'm not saying it's not a lot of money to me now, but like it was, that was like a lot. And I ended up losing that in like 2.5 weeks, 3 weeks trading. And again, I think that's very common. Because again, regardless of what system regardless of anything like that, almost all new traders lose because it really does take time to condition yourself to do the right things, to have risk management, to follow your rules. That takes time. It's not something that happens right away. And so if you jump out the gate with crazy big size, you're just going to lose more than you should. All right, guys, over 5 minutes left. That's how I lost 80K. I was new. Yeah, Top Step's dope. It's useful. I wish I would have had something like that when I first got started. I would have lost less. I don't think I would have passed it in the beginning, but I still would have lost less. And that's the use of it. Yeah, I don't know. Everything's up so much though over the last few days. I guess I'm bearish on this report just based off of extension, but again, I do think it's something in which if jobless claims come in low, market's going down. If jobless claims come in high, market's probably going up. But again, anything could happen, and it's never that easy to predict. I really wish it was. I really wish it was. Yeah, I don't think we're going to raise in December. A lot of people are making that bet. I don't think we're going to raise in December. I think we're going to pause in December. I think we're going to keep pausing well into next year. The real question is, when are we going to start? When are we going to start cutting rates? That's what a lot of people are talking about now. This head's too small for me. I got a big head. It's because I'm so smart. The real question is, when are we going to start cutting rates? A lot of people think May. I saw a lot of people on social media predicting May. But who knows? All right, guys, we got 3 minutes. We got about 1,000 people here. I'm gonna throw it in sub only mode. Again, if you have not already, hit the sub button, hit the notification bell. I appreciate it. Thanks so much. Everybody announce if you're subbed. Announce yourself. Show us you're subscribed. We are in sub only mode now. All right, here we go. 2.5 minutes. Hey, my guys, thank you so much. And ladies, thank you. All right, guys, here we go. Oh, we have the Philly Fed Index today too, man. I completely forgot about the Philly Fed Index. All right, guys, we got a minute and a half. The Philly Fed Index is expected. Let me find it. Sorry, guys. This actually is good because it reminded me to go back and check this. Again, we got about two minutes left. Today is the 16th. Yeah, so again, guys, the Philly Fed Index is expected today. Fed index is expected today at -9. It gauges manufacturing. So -9, jobless claims expected at 220. All right, guys, here we go. Here we go, team. 45 seconds. 45 seconds. $30 seconds. Again, jobless claims expected at 220. The Philly Fed Index. Again, I think the lower the Philly Fed Index, the better the market might react as well. But it's more nuanced than jobless claims, I think. Again, I think high jobless claims numbers will cause positive reactions. Low jobless claims numbers will cause negative reactions. But it's never for sure. Make sure you hit that live button so you guys know we're going live. We got 1,200 people here live. So, again, hit that live button, team. Here we go. Here's the report right now. All right, jobless claims. Import prices are out. I don't see jobless claims out yet. Market is popping up, though. NASDAQ ripped. Jobless claims numbers are a little bit late, I think. There we go. Jobless claims 231, way higher than expected. 231. The Philly Fed Index came in at -5.9, a little bit higher than expected for the Philly Fed, but jobless claims numbers came in much higher than expected at 231 versus 220. And as I said, higher jobless claims numbers, which is higher unemployment, is going to make the market go up because it means that the job market is starting to get pushed down a little bit. And that's what the Fed wants to hit their 2% target. That's what they said they needed. They said the job market was too robust. They said that it was more resilient than previously thought. And so in that regard, they want more people claiming to be without work. They want more unemployment. That's going to cause positive reactions. And that's exactly what we got today. Was jobless claims numbers coming in 231 versus 220, much higher than expected, more people filing for unemployment than expected, and thus we got bullish action right now. Doesn't mean it's necessarily going to hold. The Philly Fed Index again came in at -5.9, so a little bit higher than expected there. So more strength in manufacturing is what that means. But again, market likes this so far. There's the numbers right there on screen. Yeah, so again, this is going to be better for markets. Let's watch the market pop up. And again, if you haven't already, guys, again, check out Top Step. I've been day trading today. We've been day trading these economic reports. This is we built up a cushion. And on these funded account programs and futures, there's no PDT rule. You can day trade and short in futures with no PDT rule. And it's very similar to stocks. Like I've been mostly day trading the Q. Off of the Q price action, here's the NASDAQ 100, which is basically the Q price action. And so if I put up the Q, it looks the same. I put up the SPY, it looks the same too. And I can day trade this left side here in futures, no PDT rule, buy market, sell market, all that good stuff. Again, on Top Step, they give you a demo and they test your skill. It's only $49 for the base one. If you lose, you're only out $49 versus putting up the money up yourself, trying to day trade with thousands. You could potentially lose thousands. You're going to lose much less, even if you lose on this. And most day traders lose money. But again, they give you a demo, test your skill. Just taking the challenge builds your skill. If you're good enough to pass it, the base one, you got to make 3K without losing over 2K. A 2 to 3 ratio. If you're good enough to pass it, they fund you $50,000 with a 90% split, and they pay out millions every year, fund thousands of traders a year. If you get funded, since there's a 90% split, you get to keep 90%. So if you make 10K, you keep 9 of that. And again, there's free funding coaches. You know, they pay out millions in actual withdrawals. They've been around for over a decade. A great way to learn day trading with less risk, in my opinion, but they are a sponsor of mine. I'm incredibly biased in their favor. Again, most day traders lose money, but again, it's a lot cheaper to lose on Top Step than putting up the money up yourself, in my opinion. If you want to check it out, here's the link. Yeah, bonds are probably falling down because bonds are competitive with equities. You know, so like the worse the equity market does short term, the more people are gonna move over to bonds instead, because bonds are more safe versus equities. So when the equities market looks risky, like it's moving down a lot, investors say, hey, I'm not going to buy the S&P 500. I'm going to buy a 10-year bond and make my 5% right now, which is basically what bond prices are. And so as the market pushes up, bond prices move down and vice versa. And so here's the 10-year sitting at about 4.47%, 4.47. And what this means is, again, bonds are guaranteed money. You know, so whatever the interest rate is right now, you move a decimal place over, you'll see what the actual percentage rate is for the 10-year bond here. So what this means is you loan the government $100K and basically you buy $100,000 worth of the 10-year treasury bill or treasury bonds, then you're going to make 4.4% right now. So if you buy $100K, you're going to make $4,400 a year right now. And they're going to pay you that interest every year, you know, and then at the end of that 10-year period, you're going to get your $100K back. So over a 10-year period, you're going to make about $44,000, you know, almost 50%, 44% over 10 years, right? That's bonds. But again, they're competitive with stocks. So as the NASDAQ pushes up right here, you can see the TNX chart move down because they're competitive. Long term, they kind of follow each other, but short term, they are competitive. Hey, John, thanks for running the stream. Hey, thank you, Jonathan. We appreciate the love, bro. Our bonds and CDs basically the same thing, a little bit different. Clear signs the Fed will do nothing next meeting. Yeah, they're going to pause, almost certainly. Yeah, we've answered the activation thing. Again, once you're funded, it's a $149 activation fee the first time. You only have to pay it once, and I think that's very reasonable. You're basically paying for your market data and stuff like that. Very reasonable. Again, I'm pretty sure it's the same person asking over and over again in different names, just trying to make it seem like it's more of a problem than it is. Again, completely reasonable. It's only one time as well, right? So, yeah. And I mean, when you're getting $50K in funding, I don't think $149 activation fee is a problem. Yeah, Walmart dumping down. Bad reaction to earnings, for sure. Can you do options and futures? No. When you hear futures contracts, again, I've talked about this a lot, but futures were originally created so that farmers could lock in prices of crops, because they would grow the crops, but by the time it came to yield those crops, prices had fluctuated. It wasn't profitable for them a lot of the time. And so what they started doing is selling contracts to speculative investors that locked in the price of commodities that they were growing, and they dubbed them futures. futures contracts, right? Over time, though, that's evolved to where I can literally day trade the S&P 500 futures. I can day trade the NASDAQ. I can day trade the Dow. I can day trade currencies, gold and silver in futures. And there's less red tape than stocks. There's no PDT in futures. So I can day trade short, buy market, sell market, all that stuff. Yeah, I would say jobless claims numbers were bullish, mostly because they came in much higher than expected, which signals a job market going down, and that's what Powell said they needed in order to cause inflation to go down. They said the job market was too resilient. They said that in order for us to have the capability of hitting the 2% target over time, the job market needs to get pushed down. And so higher jobless claims numbers indicates, higher jobless claims numbers indicate that. They indicate the job market getting pushed down a little bit, which is going to be seen as a positive right now. And again, we talked about this before the report, and that's exactly what happened. Higher jobless claims numbers, market ripped, and has been bouncing ever since. Yeah, for sure, Tessie, 100%. Yeah, here's the NASDAQ. Look at the NQ ripping up here. There's a SPY up there as well. You gonna short today? I don't know. We're gonna day trade at the open. I'm not sure what we're gonna choose to do there though. How much does jobless claims affect oil commodities? I mean, let's look. You mean oil futures? Not that much. Here's CL, which is oil futures. Not that much. Yeah, again, y'all check the site if you guys want more info on Top Step. Again, they're a sponsor of mine. Y'all check out the site. They answer all these questions. Link is in the description if you want to check it out. Where's Bitcoin at? Did Bitcoin get wildly affected by this? We're actually kind of green on the day outside of Walmart. Where's Bitcoin at right now? Bitcoin still sitting over 37K. No, I'm not picking my nose. I'm scratching my mustache. Okay, there's a difference. All right. Top 3 booger pickers in the world right now, but that wasn't it. All right, that wasn't it. Yeah, for Chart Prime, you got to have premium trading. I mean, you don't have to, but you can probably use longer term. But in order to use Chart Prime, you got to have premium trading view. Which is like, for me, it's like $6 a month for premium trading view data. But I mean, I guess you could probably use longer term systems and strategies with it, but you're not going to be able to use the day trading ones, in my opinion. Big rejection of the previous closing price for oil. NASDAQ still popping up some. Yeah, and speaking of chart prime, like check out chart prime right here too. Again, my favorite one is the regular market oracle, and you can kind of see why. Like just looking at the regular market oracle, like without using my system where I look at just engulfing patterns. Like look at this: reversal down, drop, reversal up, bounce, reversal down, drop, reversal down, small drop, reversal down, big drop, reversal up, big bounce, reversal up, big bounce, reversal up, big bounce. So they're literally 1, 2, 3, 4, 5, 6, 7, 8 for 8 today in their reversals. They're going into yesterday on the regular E-mini 8 for 8. So again, you can kind of see why this is my favorite one. Now, you can also add accuracy if you combine it with engulfing candles. So look, reversal up, bullish engulfing candle, beautiful bounce. Reversal up, bullish engulfing candle, beautiful bounce. Reversal down, bearish engulfing candle, beautiful drop. Same thing here, a lot of engulfing candles and reversal down, beautiful drop. This tends to work the best when they're literally right on top of each other, which is kind of what you see. Like right on top of each other, right on top of each other, right on top of each other, right on top of each other. And this is like a bunch of engulfing candles, which gives it even more like strength. And again, this is a company called Chart Prime, Trading View Indicator Service. I find them incredibly useful. They're a sponsor of mine too. I only have 2 sponsors, and we try not to plug too much stuff. Like this is like our 3rd plug today. We've been streaming for 3 hours. So it's like 1 plug an hour seems reasonable, I think. And this will be the last plug I do for a minute. But again, if you want to check them out, here's the link. You can get it for like $50 a month. That's just such a small piece of what they offer too. They also offer like, I can put up chart patterns. I can put up the like if I want short-term trading, I can do that. I can put up their oscillators, smart money concepts, like whatever you like in trading, they have a bunch. And there's so many different indicators. They have community indicators as well. So check them out. NASDAQ still ripping up here too. All right, but now that I'm done selling out for the day, here's the link. Want an awesome target on those 3 NASDAQ single prints. Why aren't you long in the E-mini and the NASDAQ? What do you mean long? I mean, I've been going both directions. We're green on the day. We're waiting for the opening bell now because we've already built up a cushion. And so once we build up a cushion, after the opening bell, we have a little bit more wiggle room, if that makes sense. A little bit more wiggle room here. And again, we're up about 220 or so on the day, 220. Hey, thank you, DJ. I appreciate it, dude. Yeah, we try. Watch bonds closely, guys, if you can. Ooh, wait, what? Friday, yeah. I mean, look at the NASDAQ, though, guys. NASDAQ's flying up. Just big upward price action here. Look at the SPY. SPY is up a lot. Where's Tesla at right now? Again, Tesla looking weak. Microchips looking weak. Nvidia looking kind of weak. Apple looking okay. Apple had a green day yesterday too. It's up to 189s, almost 190s for Apple. That looks good too. Jobless data might be right below me. You know, right here. You know, again, it might be right below me right there. All right, so I'm going to end this poll here, guys. So we asked if this data would cause a bullish or bearish reaction. Let's do another poll. Does the market close green this week? I guess it does close green this week. Does the SPY close over? How do we do the NQ? Does the NQ close? Does the NASDAQ 100 close over? It's a good spot. I'm going to go with, does the NASDAQ 100 close over 15? 15.8. I'm going to say over 16K this week. All right, that's a reasonable one. Yes or no? Vote on that poll. Let me know what you guys think. Does the NASDAQ 100 close over 16K this week? Vote on that poll. Let me know how you feel. Let me do my earnings poll for the day too. All right, so again, big earnings drop today. Walmart, not the prettiest. Others include, what else do we have today? Let's see. All right, we got Alibaba. We got Macy's, DS, Williams-Sonoma, Bath & Body Works. Which is the one that smells like candles? Bed Bath & Beyond is the out of business, terrible company that's gonna fail. That has all the meme traders into it. Bed Bath & Body Works is like the candle store that your significant other brings you to, and it smells really good, but you start to get a headache, and then you end up spending like $500 on like 3 candles and some hand sanitizer. That's Bed Bath & Body Works, I'm pretty sure. And if you know, you know. All right. Walmart, Bob, a bunch of other ones too. NASDAQ just flying up though. Again, job data going high right now for unemployment means that the job market's getting pushed down like we want it to. Bath and Body. Do we have Powell today? I don't think so, do we? Check, man. I was like, if we do, I wasn't ready for it. No, we don't have Powell today. We got We got Barr, Christopher Waller, so we got Christopher Waller today, Michael Barr at 10:35. Again, Lisa Cook at 12. No Powell, though. Powell doesn't speak for a minute. Hey, congrats, Sam. 16K without any pullbacks. You mad, bro? Am I telling people it's going to close over 16K tap, or am I just asking a question? You mad, bro? Any promo codes for Chart Prime? BTRADE. But you got to use my link. Any reports tomorrow? Not that I know of. If everyone spends $500, bro, my wife will bring me there, and it smells good. And I like candles, to be honest. Like, I was using a bunch of candles in here, but then I stopped because I started to get headaches. But again, I like Bed Bath & Body Works. You go there, it smells good. You look at a bunch of candles. The problem is that candles are like $40 a pop at that store. So they're over there slanging candles, and it's always more than you think it's going to be. You get like 4 candles and some hand sanitizer, and somehow it's like $350 all of a sudden. You know, then you're stressing out buying it. So every time I hear Bed Bath & Body Works, that's what I think of. So to verify something earlier, jobless claims are up, which is seen as a positive because the interest rates are up, and this is signaling a push to lower inflation. Correct. I mean, not necessarily. Okay, so yeah, but that's basically right, Callie. So again, what Powell said previously is that in order for us to hit our 2% inflation target, the job market's got to get pushed down. Right. One of the most robust things about our current economy this year has been the job market. Unemployment's been low. Jobs are high. Payroll numbers are high. Unemployment is low, so forth and so on. Right. And while that is conventionally good, while that stuff usually that's conventionally good, currently it's going to be seen as a more fear-inducing thing because the job market needs to go down because we're raising rates, which is going to negatively impact banks. And if the job market doesn't get pushed down, by that, it's going to cause prices to still remain high. In order for prices to fall, people have to stop spending universally, right? Including spending that's caused from more people working, a more robust job market, and more free spending, if that makes sense, right? And so in that regard, we want inflation to go down. The Fed says we need it to go down and that the job market has been too resilient. And so with that in mind, when reports like today's jobless claims numbers come out and it shows much more jobless claims than expected, much more people filing for unemployment than expected, that is ultimately seen as a positive because that's exactly what Powell said that the economy needed in order to eventually get down to that 2% inflation target is what it is. That's the nuance of it. And that's kind of how it's been now for a long time. Like that's been like this for 6+ months. Usually. Now it's not always like that. Nothing's 100%, but lately it's been like that. The trash isn't today, guys. The trash was yesterday. Multiple coupons. Maybe I should start saving coupons. My wife said go when they have sales. Yeah, I mean, you're probably right. All right, team A, we got basically 30 minutes. Yeah, all good, Callie. No worries. No reaction from the market. Oh, we had a reaction. Again, jobless claims numbers came out here. Jobless claims numbers came out right here. And then look at the spike in volume that we got from it too. So like, look, again, jobless claims numbers. Let me fix this chart. I probably should do this. I think this would be a little bit better. So you guys can actually see. And so, yeah, look at the spike that we got, not only in price, but in volume. Look at the volume increase. Jobless claims numbers came out right here. And then look at the big rip we've gotten up from it. So, again, jobless claims numbers certainly helped the market. Certainly helped. Yeah, I mean, wretched, again, like, again, I'm going to be honest, wretched. And again, I appreciate the support and all that stuff. But when I hear people say that the data is a lie, it just means that they were wrong about their prediction. You know, nobody says the data is manipulated. Nobody calls manipulation more than somebody that's wrong about a direction in the market. You know, if you tell everybody that CPI is going to go up and that the market's going to crash, you know, and then CPI comes in low and the market rips up. Oh, it's not that I was wrong, just manipulation, you know, like I always said the same thing. Nobody cries manipulation more than somebody that's been bag holding a crazy, terrible penny stock. And it's the same thing with economic reports. Nobody claims manipulation more than somebody that was wrong about a prediction in the direction of markets. Again, I'm going to go over this. I go over this at least once a day. You got to understand the natural flow of the S&P over time is that it's going to go up over time. It's not a question. Here's the S&P 500. You know, this is it since 1928. Here's the 1929 stock market crash. Okay. And since then, the market has, you know, consistently been going up. All right. The market has only had 3 events in a century that have had more than one bearish year in a row. More than one red year in a row. There's only been 3 events in history that have caused that. And so what's the overarching point is that these things are incredibly rare. And to be fair, I saw somebody else point out this data on Twitter. So this is not all pulled from me myself, right? I did see some of this posted on Twitter. And so I'm just kind of repeating what I saw on Twitter. But there's only been 3 events in the history of the market in which we've had more than one red year in a row, more than one red bearish year in a row, more than one bear market in a row for longer than a year. And so what that means is that it's incredibly rare. And so when we look back at this bearish year, which was 2022, 2022 was a very bearish year, a very red year, you know? And so again, with the same logic in mind, right here, I was saying the same thing. Everybody was telling me down here, like right in this area, that the market was going to crash, that the market was going to fall, that I was dumb and I was just a perma bull and that the market was going to fall, right? And then again, the banks were saying it. Who missed out on this latest bull run? Retail traders that are easily influenced by the media missed out on this latest bull run. And so you have to understand the market is not going to go down forever. The market is going to go up over time. The single biggest edge you'll ever have in any financial market is that the S&P 500 will give you on average 10% a year. It's the biggest edge. What I mean by the biggest edge is it's the most consistent edge the market will ever give you. Yes, you can get good at trading penny stocks. Yes, you can get good at trading large cap stocks. Yes, you can get good at trading futures. And again, I'm a big believer in some of those things. Not really a penny stock one, but different story. But the point here is that crashes are over predicted. If you look on social media or you follow Michael Burry, you're going to think the market is some never-ending state of a constant potential crash. Okay? Those get more clicks. More people pay attention to you if you tell everybody the market's going to crash. You know, and a lot of these big time gurus have predicted the market crashing multiple times over the last few years. And then when they're wrong, they say, oh, well, I would have been right, but it's just manipulated. You know, and maybe they're right. But they're, again, regardless of whether it was manipulated or not, they were still wrong. And so I think you have to understand that edge. You can't be too rigid with crash predictions because crashes, everybody wants to be Michael Burry and the next big short predictor. But crashes are infamously hard to predict. They are not easy to predict at all. And if everybody thinks the market is going to crash, I'll say this again, and I said this 1,000 times over the last year. If everybody thinks the market is going to crash, it's almost certainly not. You know, so just understand that. I get it. Again, a lot of it I believe is politically related. You know, if you're against the current administration, you want them to do poorly, you want the market to fail to confirm your bias. And again, I'm very neutral politically altogether, but you have to understand crashes are not that easy to predict. Hey, thank you so much, Kay, for the donation. I appreciate it, brother. Thanks, man. You know, I think the biggest chance of a crash is going to be next year. I think rate hikes have about a lag effect. I think rate hikes take about a year to take effect because they're a lagging thing, and banks are going to be the ones that are really going to get hurt by them if the rate hikes really start to cause disastrous consequences to the financial markets. Banks, the reason they're going to do that, the way they're going to do that at least, is that they're going to affect the banks, because by raising the federal funds rate, it makes banking more expensive and it hurts their margins. It pushes down banks, and then banks raise interest rates to consumers, and then that causes people to stop spending as much and thus lower prices. But banks are the ones that are going to get affected by that. And if you look back at the last year and a half, prior to the last 4 months, we have raised rates incredibly aggressively. So it's been really aggressive rate hikes for the last year and a half, and we're going to start to see that play out in markets next year. Again, I don't know what's going to happen. It's also possible that the market stays resilient to that as well, but we got to watch inflation if it does. And so it's a balancing act of like recession fears versus inflation fears. The less recession fears we have, the more inflation fears we have. The more inflation fears we have, the less recession fears. And it's a balancing act. You know, and that's what the Fed has to do. That's the act of the FOMC, is to figure out when the right time to attack each side of that is, you know, a restrictive versus unrestricted monetary policy. Yeah, I mean, I did that as well, Woods. Like my favorite system in trading is to wait for big market pullbacks and buy the dip. Like in 2020, when everybody was telling everybody it was fire and brimstone and the market was going to fall, I bought up MGM very cheap at single digits for MGM. I bought up United Airlines at like $20, $25. I bought up a lot of different stocks. I made videos about it as well. We had another channel called, that we posted. I posted a video saying why I'm buying United Airlines right now. You know, and again, United Airlines was under 20 at a lot of points. You know, and I've told people, I said, hey, this is why I'm buying United Airlines now. And this is why I don't like definitive statements, is because what happened when I posted that video is a lot of people, multiple different people, posted in the comments, these are garbage. This trade's not going to work. United Airlines is going out of business, blah, 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 blah. These are garbage picks, bro. You don't know what you're talking about. And one of the most beautiful things that really started to build my confidence as a trader was posting that video, getting those comments, and then United Airlines bounced back up to almost 50 within a couple weeks. So it bounced up huge percentages very, very quickly. And then what happens when I check the comments? All of them deleted them. Everybody that said those negative comments immediately deleted the comments afterwards, right? And so again, you have to learn to go your own way. You have to learn to tune out all the negative nonsense in trading, because the people who are the most definitive, like, oh yeah, that for sure isn't going to work, or yeah, the market's for sure going to do this or that or whatever. Again, they're usually the newish traders, because they don't understand. It's never 100%. Experienced traders recognize that nobody freaking knows, and that regardless of how big my conviction is about anything, nobody freaking knows what's going to happen. That's something that experience gives you in the market. The rookie traders are the ones saying the market is going to do this, the market is going to do that, buy now, sell now. Those are the new traders, you know, and you have to learn to recognize them as such, because if you follow people like that too much, you're going to lose, because you're going to get emotionally pushed out of trades that you should be in or that you shouldn't be in or whatever. Not really. Like, it wasn't the biggest sweat, Greg. Anytime I take positions, I'm not usually taking like monstrous positions in anything. If I could do it again, I might, though. But again, that's in hindsight. Hindsight's 2020. Burry also says sell. Burry's called about 20 of the last 2 market crashes. And again, I can't knock him. I said this yesterday. If I'm Burry, I might be freaking skeptical and distrusting of everything. But again, regardless of whether he should be or not, his accuracy hasn't been the best lately. I mean, if you keep throwing, he's called a market crash essentially every year. Like if you keep throwing darts at a dartboard, eventually it's going to hit it. Eventually we will crash because that's just the nature of the market. But as I've said 1,000 times, the S&P gives you on average 10%, which means that you're going to have that includes crash statistics, which means that you're going to crash sometimes, but that on good years, it's going to move up. It's going to move up much more than that to compensate for the times it crashes, right? That's the thing to understand. And so you have to understand the numbers behind everything. If you want to, Embers, do your thing. All right, team. Again, there's Apple. We're watching the NASDAQ a lot today. Been mostly trading the NASDAQ. We're going to get ready to start actively day trading. We built up a cushion. We built up a cushion today. All right, big pullback on the NASDAQ. We might start to buy this dip. It's a big dip, though. Is one of the Fed speakers saying something bearish? We bought this dip. We got a cushion on the day, so I want to see if we get a quick little bounce up. We could also add to it to get in more. Let me get this out of the way. There we go. All right, $10. All right, we just made another $30, and I took a very quick profit on it. Yeah, and I could show you that old video of me making that United Airlines call, just so y'all know I'm not talking out of my butt here. This is an old channel that Money Mitch at Benzinga and I used to run. Look at it here. Let me figure it out. Yeah, there it is. Look, this is right in the middle of 2020. Why I'm buying United Airlines stock here. Again, you can see it's 3 years ago. It's right after 2020. And it was down so much. They deleted the comments. The comments aren't there anymore. So, and they were comments for sure. They were like, they deleted all of them. Not one of them said, hey, you were right, I was wrong, sir. Not one. Which shows the ego floating around in markets. All right, sorry guys. What news in 3 minutes? Am I missing something in news? Let me see. We got industrial production and capacity utilization in 2 minutes. None of these are big releases though. Industrial production is probably the biggest one. Expectations are minus 0.3% for industrial production. They come out in 2 minutes. Ego seems to be a prominent thing. Yeah, the problem is like an anonymity causes weirdness, and people like, you get a lot of like traders that, okay, here's an example, right? I'm gonna go into like psychology for a second, but you get a lot of narcissism and BPD in trading. Because I think it makes people feel smart, and so that kind of gravitates like narcissism and stuff like that. I've got a family member who, no matter how much, she'll never admit she's wrong, ever, about anything ever, right? Never admit she's wrong about anything ever. She will, she could be obviously wrong about something, and you could say, hey, you're wrong because of this, and this. Or she could do something not nice or do something, even if it's a mistake. She will never apologize, never admit she's wrong about anything, ever. And so one of the first things I teach my children, like my kids, is you can never be, if you ever want to have credibility with anything, you have to admit you're wrong. You can never, if you hold on to things too long and you get too prideful to admit you're wrong, you lose any credibility you had. And so it's something that I try to do. I might not admit I'm wrong a lot, but I certainly admit I'm wrong sometimes when I am. And I always put out the nuance of like, hey, I could be wrong here as well. All right, here goes the industrial production numbers. Let's see what they are. All right, so that just dropped. I don't think these are going to influence the market at all, though. Yeah, market hadn't really budged. Okay, industrial production numbers came in at minus 0.6%. But yeah, again, that's a sign of like borderline personality. That's a sign of narcissism. Like people like that will never admit they're wrong about anything ever. They're never wrong. They'll never admit they're wrong. And those are huge signs. And it's one thing to not very often admit you're wrong. Like I have an ego, I'm sure, and I probably don't admit I'm wrong a lot. But I certainly do sometimes. Right. And there's a difference between that and like never admitting you're wrong about anything. It's just a different thing. And so then it's a bad sign if it's somebody that just won't ever admit they're wrong. And so I see it a lot in the chat where it's like people will be like, hey, the market's going to crash. Look at it. And then the next day the market rips up 5%. And it's like, hey, what happened? You said the market was going to crash. And be like, oh, well, no, I didn't. I never really said that. Or, oh, well, I meant this other thing. It's like, come on. Like, just admit it. But what if you're never wrong about anything? I don't know. Y'all should ask me. I'm never wrong about anything ever. Even when I'm wrong, I meant to be wrong. Okay? I intentionally chose to be wrong. And so I don't even know what wrong means. Market's kind of flat right now. The NASDAQ sitting right at that 200 EMA VWAP level. We do have an engulfing candle, though. You admit when you're wrong, John, at least on this channel. I try to. Yeah, no, it's manipulation when you're wrong. Hey, the GOAT. Bro, is your portfolio already bigger than 40K? I mean, I have like 50, I have like close to 60K liquid in the account, but my portfolio currently has about $21,000 invested. But I recently took a lot of profit. Prior to that, I can't remember what it was, but like on this latest bull run, I did take some profit for sure. I'm wrong. Yeah, I got on Target yesterday or the day before. I already wrote it up on Target. I took profit at like 130 or something. I can't remember exactly. Maybe it might have been 129s or somewhere around there, but it was right around the top. What if you are always wrong? Well, as long as you can admit it, then you're still doing better than some. Heads I win, tails you lose. Hey, sounds like my type of coin flip. Hey, thanks, Adam. Knowing that you are wrong gives you opportunity to learn and get smarter. 100%. I think so too. And anybody that's traded the market long enough is humbled by being wrong. Like, again, I thought Tesla was weak at 100. I thought GameStop was a short prior to the 2021 squeeze. I thought GameStop was a short at $4. To a certain extent, I was right. I'm never wrong. But no, I was definitely wrong. Luckily, I pivoted and wrote it up, though, afterwards. But, like, still. Once I noticed the squeeze, I didn't actually short it, though, just to put it into perspective. Like, I was never actually shorting GameStop. I just thought it was a short. I thought it looked weak. I thought it would go out of business. All right, so again, market's still pulling back a little bit after this bounce. Dude, the Fed is starting to post economic data. They posted the industrial production numbers. They didn't post jobless claims, but I think that's different. But that's interesting. All right, so we are dipping on the NASDAQ here. Look at 3 years younger John and his little measly market setup. Look at this setup. Look at 3 years ago John. 2021 John. Look at him. Still handsome as ever, but definitely a more humble monitor setup for sure. Great way to gauge when your position is too big for you is when you can't even take your eyes off your trade. Yeah, it depends on what it is. When I'm day trading, even if I have one share, usually I'm watching the trade, but depends. Look at the monitor setup here, though. I remember when I got this monitor set up, I was so excited about it. You think Tesla will hit 235? You mean go down today? Right, it's over 235 right now, right? I mean, it could. I don't know. It's possible. GameStop will not go out of business. I don't know, man. If they don't, what's their business model look like? You know, if they don't, what's their business look like? You know, I feel bad, bro. So the other day I was in jiu-jitsu and I went for my first ankle lock. It was my first ankle lock. I had gone from it before, but I got to finish with my first ankle lock, right? But ankle locks are kind of frowned upon in a lot of ways. And I was rolling with this guy, and then I went like this, and he tapped very quickly, and he looked like it hurt. So he was like, oh, you know, when he tapped really fast. I felt horrible afterwards, and I just wanted to make sure I'm not doing it wrong. And then I realized there's like a reaping rule, and I don't know, my leg might have been over him. And if it was reaping. I'm hoping I didn't like hurt his knee. But I think with reaping, I hope I didn't reap this dude's knee. I asked him if he was okay afterwards, and he said, yeah. At the time I was excited because I was like, I got my first ankle lock finish, but I'm worried that I did it wrong, you know. And then I mean, he tapped, but like, I thought it was a straight ankle lock, but I hope I didn't get my legs wrong. But yeah, the problem with GameStop is video games are not purchased physically very much anymore. You got outliers who still do, but it's not a majority for sure. Like a large majority of people just buy online games now. They don't need to go to GameStop, and that basically cancels out a huge. GameStop's major part of like their primary business is buying and selling used games for profit. They buy a game from you for 30 cents, they sell it for $59.99, and that's how they historically made money. And to a certain extent, it's karma. But like, you know, but they buy it for cheap and they sell it for more. But that whole aspect of their business, that entire part of their business is no more, because nobody buys physical copies of video games anymore. They just don't. And so the amount of people that are going to be selling them physical copies is going to go down because people aren't going to own physical copies anymore. It's going to dry up a lot. And so what that means is like, where does GameStop pivot to? If they keep trying to do the same business model that they've done, they will fail. They will go bankrupt. They will go out of business. And it's not an arguable thing. If you look at it objectively, that's the truth. I play video games. That is the reality of it. If they do not pivot, they are going to fail without question. And so in that regard, how do they pivot? Where do they pivot to? What do they end up doing? How do they change their business model in a way that brings back business? Because again, it's not selling physical copies of video games. You're always going to have console sales. I think Barr's tanking the market right now. Michael Barr's speaking. I think he's dropping the market. But you're not going to have physical video game sales anymore. That's an obvious, objectively true thing. So, again, where does that business go? That's the real question. What happens to their business now? Was your leg on his hip? I can't remember. Is that reaping if it is, Randy? Was that a 34-inch? Yeah, it's a 34-inch ultra wide. I have right now I have two 34-inch ultra wide stacked on top of each other. Is what my current monitor setup is. My monitor setup has grown from there. I'll put it that way. You know, so like my current monitor setup looks like this. Sorry, let me. Bear with me, team. Yeah, so my current monitor setup looks like this. Sorry. So this is my current monitor setup right here. That's why I have two 34-inch ultra wides. Actually, yeah, that's right. This is my current monitor setup. Although this one I think is maybe a 32-inch at the top. This one right here. I think this one might be a 32-inch. But 34-inch ultra wide, 36 or 27-inch, 27-inch, 34-inch ultra wide at the top. But yeah, that's basically my current setup. The one that y'all see the top monitor right there is the one that y'all currently see. All right, guys, we got 2.5 minutes. If your leg goes across his belly, it is. I'll have to, I can't remember. No, I'm not selling books anymore. Oh yeah, my house is very nice. Again, I always try to tell people, look at Apple rip up here. This might actually help the market. Look at Apple pop up. I'm not sure what Apple calls or what caused this Apple run up. But no, my house is nice. Again, if I really wanted to be sleazy, I could use my house as some type of like social proof that I'm like a day trading millionaire, and then use that to sell you guys a sleazy course or stock picks and make millions from it if I really wanted to. But I'd rather just have privacy. You know, not you know, yeah. I'd rather just not do that. Hey, thank you, Greg. All right, so yeah, look at Apple pop. I don't know why Apple went up. The Nasdaq's still technically green on the day. I still buy discs. Yeah, but again, there might be outliers. I'm sure there are outliers, but like outliers aren't going to save the business of GameStop. Apple's still running up, breaking highs here. We got less than a minute left until the market opens. Straight ankle lock. You wouldn't have your leg over here. Okay, maybe that's what I did wrong. I don't know. I'll have to apologize the next time I see him. I really didn't know any better. I thought an ankle lock. I thought a heel hook was different, you know. So I'll have to apologize. I didn't mean to do it. Again, I asked him if he was okay. He said yeah, but I don't want to torque on his knee. You know, is what it is. All right, there's the opening bell, guys. Apple shooting up at the opening bell. So again, we'll see if we hold now. Big dips. Look at the market fall. Big dip. Apple still ripping up though. What a dip. I'm going to buy this now. A little risky. We got a cushion on the day though, but man. All right, green. I think we just made 80 bucks. Yeah, we did just make $80 very quickly. I thought it looked weak, and I think with Apple running up, it looked like it dipped a little bit too much when the most heavily weighted stock, which is Apple, in the world ended up pushing up to almost 190, and I thought this dropped too much, so I bought that dip. We ended up making money on it. We're up 315. We actually haven't lost day trading futures today. Not once. Out of 14 trades, no losing trades. Not yet, at least. Yeah, you're probably right, Bruce. Yeah, 100%. Again, I feel bad about it now. It's only reaping if you put his calf on the back of his thigh and torque his knee. Yeah, I didn't do that. I just did a heel hook, right? So I just kind of wrapped my legs around him like I thought I should. But the way I thought it was is that if you move your, like if I'm using my right arm to do the ankle lock, I thought that if I moved my right leg inside out, so from the pointing to the outside, and that's when I tweaked, or that's when I like cranked on it. Then it wasn't reaping. I thought if I had done the other thing with my left leg, with my right, like getting the ankle lock with my right arm, but using my left leg over his left or over his right leg, and then cranking on it, that was technically reaping, is what I thought. Right? It's still super nuanced. I'll have to learn a little bit better before I try ankle locks again. You know, he was okay. He was fine. But like, still, I felt bad. All the pressure was on the foot. I didn't crank his knee at all. All right, so now we're starting to give it a little bit back. Apple's starting to pull back some too. Yeah, he was a cop too. Watch me get a ticket now. I'm gonna be like, hey, bro, we're buddies from jiu-jitsu. Remember? He's gonna be like, nah, bro. You hurt my ankle, sir. I'm gonna short this. I just made a little bit more. We're up 350 on the day. Grinding up currently. 350. That's a 1 minute chart. All right, so big rebound back up, starting to head up. Big upwick. Big rejection on the NASDAQ. Very choppy open, though, team. We haven't really gotten any good action here, I would say. Should have attacked that upwick there. It's all right. I want a short here, but we're also too choppy for me to really get a good directional prediction, I think, here. Hey, what's up, Tanya? Yeah, all good. I didn't get the best fill on this. I just made another $65 quickly. Up around 400 on the day, man. No losses yet, though. I'm going to short this again. Ooh, bad fill here. I'm going to try to fix my average here and get a pull down here, but... Oof, punished. Yep, well, we got our first loss for the day, and it basically gave back all the profit we made. We were allowed to take larger risks, but like it hurts. It hurts. We still got a 4.5 to 1 win-loss ratio, but it hurts. I might switch to the E-mini here and figure out what we want to do from that. Trade that one a little bit better here. I'm not mad. I'm definitely top 3 maddest people ever. Should have known better. Market's so choppy right now. Nasdaq's starting to rip back up, though. Looks good. At least when we have that big drawdown from scaling up our size, we're still slightly green where it could have been red still. So, optimism, I guess. Freaking optimism. We got to wait for a good trade now, though. Very flat day so far, chopping back and forth, up and down. The only real edge, I think, is attacking the range. If there's something good to attack in that regard, maybe. But we have just kind of gone up and down, over and over and over again today. Maybe we trade the Dow, too, if the Dow gets a good setup. I'm just trying to find stuff in which we're getting like good price action. So flat though today, unfortunately. Equities portfolio is still not doing that bad. I don't think we have any other economic reports today. E-mini starting to dip. Let's see if the Nasdaq starts to rebound. That's a good gold price. Gold. Yeah, I would just be very careful trading today. Like gold, if we put up gold, gold is currently, gold is GC, GCGZ3. Okay. Gold's pretty strong. Yeah, I don't know if I like this one. Too much. It might be trading view. You gotta have premium data, like we said, American. Didn't you ask that earlier? Same thing. Here's the Nasdaq again. Just such a choppy open, guys. I'm gonna slow down. Apple's very sideways. Everything's flat, which is interesting because we had jobless data come out today. We don't really have all the economic data's out. Oh, I'm not sure than American. I'm sure there's going to be slight deviations from it, platform to platform. That's pretty standard. Yeah. Again, this is choppy action sucks. I would be careful today. I mean, this looks strong, but I'll try this once. Trend looks good, but I might just be getting impatient here. Apple's breaking over highs, so that's why I'm buying this. Apple just broke highs of the day. This should give us enough to pop it up, I would say, the NASDAQ. We had that little pop. Apple's still running up a little bit. I might add to this too. There we go. Should have added. That's all right. Definitely should have added here. All right, just locked in a little bit. Again, I saw Apple start to rise. This is how you get a little bit of a head start on the moves like this. Like if I could see Apple start to run and break highs, then I could probably front load into the NASDAQ before the NASDAQ follows it. Sometimes, not always. Not again, I can't guarantee anything, but like that's usually how I do it. I'm going to take another position here. A little bit more of a high of the day trade that I don't usually take. I just see Apple surging up so much. I just took it out, made pretty quick $130 there on that high of the day break. Again, I'm watching Apple surge and then I'm trading the NASDAQ. And this is how you trade futures, but you watch stocks, right? This is how you get exposure to stocks, but trade futures. Again, if you want to check out Top Step, check out the link in the description. They fund traders and futures. If you could pass their testing, great way to learn. Most day traders lose money. I'm always honest about that, but it's a lot cheaper to lose on Top Step. $49 for the base one than putting up thousands and risking that, trying to look cool. You might as well try a funded account program. If you're good enough to pass it, you still get 90% split. If you're not good enough to pass it, you're going to generally lose less most of the time, at least, than you would putting up the money up yourself. The base one's $50K. It's only $49. They've been around for over 10 years. They have free funding coaches. Most legit one in the world. Check them out. Here's the link. That'll be the last plug I do today, guys. Big rip up. Again, you can kind of follow Apple into these big pops. Is AMD ripping up? Gold flying up. Gold almost up to 2K. I'm in gold too. Hey, nice quality. Congrats. That's great. All right, look at the NASDAQ pop up. Microsoft, I'm in Microsoft right now. I just don't need to really watch it. Microsoft's been going up. It's almost up to 375s. So we might be doing a quick crypto show today. Yeah, so BLK filed that ETH one. We're going to be talking about some of this stuff too. It's a big pullback. All right, so get ready, guys. We are going to be doing a crypto show today. Go ahead and buy this dip. $90. So not too bad. Look at the E-mini. What's the E-mini doing today? Still kind of going. Affirm. Yeah, I could try to look at it. Hey, guys, we're going to be doing a crypto show. I appreciate the love. Y'all hit that subscribe button. Hit the notification bell. Thank you guys so much for joining the stream. We appreciate the love, guys. Again, we are going to be doing a crypto show today as well. As soon as we go to this crypto stream, you better hit the subscribe button, guys, okay? That's all I'm saying. We do this live every weekday for free. We don't sell a course service. Crypto channel completely free as well. So, yeah. All right, guys. All right, team. And again, we're going to be doing a crypto show. As soon as we end the stream, it should immediately bring you to the crypto channel, team. So if it does not, for whatever reason, you can go to this link right here if it doesn't. All right, so you should be able to go right here. And again, I'll see you guys over at the crypto channel. Appreciate the love. As soon as you get over there, guys, hit that subscribe button. We're going to start that stream up right now. And yeah, I'll see you guys over there. Y'all be safe. Market's ripping. NASDAQ ripping.